Next corporate on the show then, that's IOL Chemicals. The stock is down 6% in trade. The numbers look subdued, particularly on the margin front, where margins have fallen from 31% last year to 24% this year. Sanjay Chaturvedi, the CEO of the company, is now with us. Mr. Chaturvedi, morning. This is Rima here. First, if you could talk about the margin pressure that you've seen, particularly on the pharmaceutical side of the business, the reason and the outlook.
Thank you very much for having me. If I look at how the company did last year, the margins fell for the quarter, but if you look at the annual basis, the margins are still pretty healthy. We've delivered an EBIT margin of 30% plus. The contraction that happened was really because of increase in raw material prices, input cost, as well as in the first and the second quarter of the year, there was a lot of stocking that happened. And Q3 and Q4, the demand was subdued because of COVID. There was too much of stocks that the customers already had. But going forward, we certainly expect, in the next quarter onwards, the demand for some of our key products to pick up again. Having said that, the demand for the chemicals did very well. The pricing for chemicals also did very well. So if you look at the end overall for the year, last year, we delivered a total 4% growth in revenue and a 23% growth in PAT. So overall, it was a fantastic year for us. And going forward, we expect to grow the business. Today, we have visibility for about 15% growth for this year, and based on the numbers that we have for April and May, we seem to be on track to deliver those kind of growth numbers.
Mr. Chaturvedi, in terms of margins, can you provide us with some outlook?
Yes. So, 30% margin is, EBIT margin is what we delivered last year. We will be somewhere close to that number this year as well. The challenge I'm hedging the answer is a lot of our business really depends on Ibuprofen, and there has been a softening of the demand and the pricing. But having said that, our chemicals business is doing very well. And the other products that we have in the pharma segment are also doing well. So we hope to make up the loss of margin in Ibuprofen with some of the other products.
Got it. Are there particular segments where you are seeing sustained and unusual price increases? I'm talking about inputs that you use, Mr. Chaturvedi.
Yes, certainly. Some of our input costs have gone up, and I don't believe that is structural. These are temporary increases. So, for example, we noted, just last month, all the intermediates that relied on oxygen being used, their input costs went up. And there was a brief period where the input costs were up, more than double or triple. But very shortly, they are back to what they were, the pre-second wave pandemic level. So I think these are not structural shifts. These are temporary things that we can manage.
Okay, so spikes seen in some of the input costs, but on an aggregate basis, Mr. Chaturvedi, what has been the increase in input costs for the chemicals that you need, or for the inputs that you need in the month of April as well as May?
So I won't get into the specifics, but they are, I would say, single-digit increases. But having said that, in certain products, we are able to pass on that increase onto customers. So it's really a balance that we are walking here.
You spoke about Ibuprofen being a bit subdued. Prices of Ibuprofen were stable until February. Where are they now, and what will be the impact in FY22 on your estimates?
Okay. So if I look at the whole of last year, the prices of Ibuprofen worldwide were pretty stable at about $13, $14 levels. This year, we expect them to be in the $12 to $12.5, maybe $13 levels. But we expect it to be north of $12 for this year.
Okay. And you spoke about chemicals doing well for the company. That's about 40% of your sales. Which are the products that will do well for you next year? And what is your own estimate on the margins that you will enjoy on the chemical side of the business?
Okay. So, if you look at us as a portfolio of products, if I go back, a few years, chemicals was the dominant part of our portfolio. In this past year, chemicals was about 40% of our portfolio. And our overall strategy is we hope to launch more and more products, more on the pharma side than the chemical side. The chemical side of our business will be driven primarily by ethyl acetate and a few other products. So if I look at this year, the pharma instead of 60% would be at maybe 65%. And in the next 2 to 3 years, we hope to get the pharma component up to 70% plus. So in other words, the company is actually in a transition phase where the product portfolio, both are growing, chemicals and pharma, but the pharma will grow faster than the chemicals, and therefore that will drive a higher percentage of our sales going forward.
We'll leave it at that, Sanjay. Thank you very much for joining in. That's IOL Chemicals saying that going ahead, pharmaceutical will contribute 70% of their revenues versus 60% currently. We'll get into a break on that note.